All right. Let's see, what are we looking at today? So we don't have any news today. This is the start of the month. We are on the 4th of May, and it's a Monday. It's the first Monday of the month. Okay, I'm marking out, just removing these. I'm marking out New York session open, pre-market London, New York session open, and I'm checking now. Where's my bias for today? I really thought this is going to do an all-time high and continue to the upside, but it didn't. And what did it do today? It really shot into the 4-hour fair value gap right here, respected it, and now we are in this region right now. So what am I seeing the market doing now? So this is what I'm looking at because we are on the higher time frame on the 4-hour. The market respected this fair value gap area and also respected this 1-minute fair value gap area. It might continue, respected this area, and might continue to the upside. But it's not certain because we don't have any break of structure that's happening right here. So what are we seeing here? There is a break of structure. If we call this a low, there's a break of structure right here to the downside. So the market is a bit of a conflict. There's a bit of a, are we going bearish or are we going bullish today? And I can see that these liquidity areas right here, right there, and right there has been swept. So the market might reverse from them, has been swept. It didn't break structure underneath these areas. So my bias today is basically both ways. It's not anything certain for today. Give it some time before we decide anything. And on the Nasdaq, what is it looking like today? This spike right here was a huge spike. We didn't have any news today. ECB President Lagarde speaks. It's Tuesday. This is a clear break of structure going to the downside. So we might have a bearish trend right here. But the same thing goes with this fair value gap touched into the 4-hour fair value gap right here and respected it. And also touched about 25% of this fair value gap. Okay, an American warship was struck by the missile in the Strait of Hormuz during that time. Okay, that is why. Missile strike. All right. Anyways, we are going to mark out the highs and the lows and see the reaction off of it. I'm gonna mark out these highs right here on the 15-minute liquidity. We have a 1-hour liquidity right here that we don't really need to mark out. On the 15-minute, I'm marking out these liquidity areas on the high. Also marking out this liquidity area to see what happens. All right, the market's about to open in 4 minutes. All right. Um, this is what I can do during these sessions because it gets a lot of quiet time. My plan is to give this a try and see if this works for us. So my plan is to do some back testing so we can still improve and still learn and still try out our strategy during that time. So you can follow along. I'm gonna try to talk and see my mindset going through these backtesting sessions as long as they don't affect the trades that we are taking right now. Let me just structure it properly. So I have the DAX on this screen. I have the gonna move the NASDAQ also on the screen. Right, let me just so we are on the 4th of May, right? Let's just go back a month. This is what we can do. There we go. I just marked out London session on all of them. On the NASDAQ, on the 4th, 6th of April. Why is it jumping to Tuesday? Currently, there is no 6th of April. So we start on the 7th of April, Tuesday. Stay. All right. So I'm jumping to replay mode right there on the DAX. And I'm also doing it on the NASDAQ. And this is the way that I usually backtest. I don't backtest that much anymore, but it it does come times for me to backtest when I'm feeling a bit self-conscious about the strategy that we are using. So, uh, good morning, good morning. So this is what I'm doing. I just don't want to miss anything right here. Let me double check the charts. Yeah, I have alerts on them, and as soon as the alerts pling, then I can react of them. All right. So the way I usually backtest is just follow along with the strategy. I mark out the school run. I mark out the 1 minute strategy. I mark out the. I usually do them both. The symbols that we are trading, the DAX and the Nasdaq, and I see basically based on. I even backtest the risk management, so I know like what am I risking right here. If I'm risking 1%, if I'm using the fast track or the slow track strategy risk management system. So let's jump into the DAX. Let's see. So if I go to the 1 hour, I'm looking at the 1 hour. What am I seeing right here? Okay, I'm seeing that the market is going bearish. I'm marking out bias, bias bearish. Then I jump to the 15 minute. I mark out this high right here. I jump to the 15 minute and I check. Okay, what are we looking for? Liquidity right here, liquidity right here. And this is usually what I do. I jump to the 1 minute directly. And because it's so close to market open, I usually draw a line because I don't want to know what's going to happen. So I'm drawing the line on the 15 minute, 9:15, to see basically when the 1 minute candle is about to close. And that indicates when the 15 minute candle is about to close because the 15 minute candle has 15 1 minute candles in them, right? So this is what I do. I play, I press the play button. I'm watching for maybe these highs or these highs to be swept before I can do anything. And if they get swept, give me a reaction to the downside. And this is how I try the strategy. All right, first liquidity being swept. What am I waiting for? I'm waiting for a break of structure to happen. No, not a clear break of structure. There we go. Break of structure just happened. Waiting for a fair value gap reaction to the upside. Is it too close to market open? I'll give it some time. All right. Just tapped into this fair value gap area right here. Can I take this trade? Sure. This is a trade I can take. Am I putting my stop loss here or in this area? Yeah, I'm putting my stop loss right there. Putting my first take profit on this area right here. I'm risking, like I'm treating this like this is the real thing. I'm risking 0.5%, right? Okay, I'm taking the trade. All right. So I just fake took the trade. This is the backtesting session. This is not the real thing. And this area right here, because it did this, and this is where I want to add to the position. I want to add to the position and I put an even tighter stop loss. I'm even doing this, pressing these two buttons. So this something else shows up. It indicates almost that I'm practicing my subconscious to take when I take the trade, Shift T, I'm pressing Shift. I'm not pressing Shift T, I'm pressing Control O just to get into the habit of taking the trade and then waiting. Right, school run is no more. This might take me out because usually when these candles happen, touch and then continue rip into the downside. The reason why I put my stop loss on this area right here, because it already respected the fair value gap on the 1 minute once, twice, 3 times, and this is the fourth time. So, all right, see, continues to the downside. I'm taking, yeah, I just wanted to say this is probably a fair value gap on the 5 minutes. I'm taking one TP right there on the 50% mark of the 5 minutes. And then moving my stop loss to break even. So the stop loss will probably be right there. Yeah, I wouldn't I take profit on the first position right here. I'm moving my stop loss on this position right there. All right, let's refocus. The alert just hit on the Nasdaq. So the 50-minute candle, there's no school run, there's no school run. I'm dropping down to the 1 minute right now. Liquidity has been swept. I'm waiting for a reaction to the downside. I'm waiting for a break of structure. Waiting for a break of structure to happen right there. I'm marking out this fair value gap right here, going to the upside, thinking, okay, what if I'm wrong? What if we are bullish? This is going to be tapped in and then continue to the upside. Yeah, this is probably going to take out more liquidity. Going to the upside, take this out. Right, I'm I'm still watching it. I'm not losing it. Right, let's continue to the back testing and let's see. So I just back tested on taking the first take profit right here. And let's see if it stops us out on break even. And the entire take profit position right there. All right, it just took the first take profit. It's continuing to the downside. I'm removing this, removing this. All right, going over to the live session. Watching the NASDAQ. New low created right there. New low right there. Checking what the DAX is doing. If this breaks structure, I'm gonna take the trade directly. I'm not waiting for a fair value gap here. Yeah, no, nothing happened. New low created soon, very soon, when this candle closes. The market is uncertain. Like it's taking some time before it decides where are we going. Are we continuing to the bullish side or are we just lingering around this area right here? Haven't decided yet. Right. You can see that it almost entices one to, we're about to break structure to the downside on the 1 minute, and then it continues with these large candles like it did once here, once there, right? One's here, one's there, and one's here. But it still didn't break structure because the body of the candle didn't break over the wick. So this is where people, like I've done these mistakes before. We're hoping for it to break structure, so we don't want to miss out on these right here, these 10 pips or 10 points. So we enter the trade without it having to created a breakout structure, and it reverses to the upside. Um, the reason for me wanting to take a trade without waiting for a fair value gap before on this area was because if I wait for a fair value gap reaction, because the stop loss is already way too tight, it's not worth it to wait for a stop loss going to the doing a pullback into the fair value gap area. Because in these scenarios, the market just continues, like it can be a 3-minute trade. This is probably gonna go continue up. This is what I wanted to do. Basically, I wanted to continue up, take out this liquidity, and give us a smooth way down. Right. This is what I'm thinking right now. All the people taking the trades right here to go short has been taken out, and still, like, it can continue to the downside if it gives us a good and clean entry. The DAX is not giving us anything. The DAX is not giving us anything because there is no liquidity that's been swept going to the downside, right? Liquidity not been swept right here. There's liquidity right here that's not been swept in this area also. The market can just continue to the downside without us keeping a trade on the DAX. I want this to follow, going the opposite direction of the DAX. This break structure, I'm taking it, waiting for it to drop 8, 7, 6. Nope, I'm glad I didn't take that one. seeing it from this perspective right now, it looks like a breakup structure, right? And because it didn't look like a breakup structure in my broker with the candles. As soon as I zoomed in, it I think it just wants to take out some liquidity before going to the downside. So the DAX is continuing to the downside. And having the DAX continuing to the downside and the Nasdaq continuing to the upside, that's not common that these moves happen. I'll put an alert on this 15-minute resting right here. Still being patient with this move right here because it's got liquidity and fortunately it didn't give us a fair value gap right here. See what now it moves. This candle is back. No, I'm not taking it. It didn't break structure, uncertain spike, huge. Like, what is this? Around 40 pips. Candle just happened from nowhere. Yeah, no. Yeah, I'm not doing anything until this liquidity on the 15-minute has been swept. So I'm going back to the backtesting to see. And I have this alert on NASDAQ and on NQ. I'm going to move them here. Just going to double check. All right. Continue in the backtesting session. Let's see what's going to happen. Taking another take profit on this one. Why? Because there's probably an order block right here or a fair value gap on the 5 minutes that's been respected again. You know, by the way, that there's a fair value gap right here by on the 5 minutes because every 5 minutes has five 1 minute candles. So one, two, three, four, five, and when there it's a move like this, it usually means that there's a fair value gap right here. I put my both positions into stop loss to break even, and we're ready. We're gonna stop out or profit. That's easy. Yeah, stopped out at break even and why? See, fair value gap right here, fair value gap right there. Probably I would have taken my profit with 50% off. So I'm not gonna count it exactly one to one. 50%. Say this is I pressed zero point 0.5, zero point 0.5. I got 25% on both of them. This is how I count it. I count it at 500. Does it work? I like to see the equity curve when I backtest, by the way. I'm having audio problems. Sorry about that. Anyone else having audio problems? That lag. Yeah. All right. It's choppy and breaking. All right. Sorry about that. All right. I just restarted the audio and the headset. Hope it works better now. All right. Thank you for mentioning it. Better now. Great. Anytime. All right. So just to not lose perspective on the Nasdaq, I put an alert on it, and I'm watching it. If it breaks, sweeps the 15-minute liquidity, right there. Let me show you. Right there. So I'm waiting for this liquidity to be swept, basically. All right, continuing the back testing. So, like, this is what I do. Okay, the back testing. This is all right. It's continuing to the upside, and this is the back testing on the DAX London session. So the same day, because I'm on the 7th of April. So I don't know why this day is not here, but the same day, I want to get the same feel for how the market is moving these both days. So yeah, my alarm just hit at 45 minutes. I'm just gonna take a short break. I'm gonna take my cell phone with me if the liquidity sweeps the gets swept on the 50-minute, and I'll be back soon. All right, I am back. I assume it almost faked a break of structure right here. It went down. People thought it's going to break structure, and it continued to the upside. What is the DAX doing right now? Let me check. Ah, it reversed. Right, let's continue the back testing. We were here on Nasdaq. So in this scenario, this is what I'm looking at. I'm not sure where the market is going right now, right? And because we back tested on the DAX, so the market was bearish. I had a bearish bias, so I jumped to the Nasdaq. This is the back testing session, just to be clear. And we are bearish here as well. I'm waiting for the first candle pre-market to close, and it indicates to me that we have a break of structures to the downside. We also have a fair value gap right here that's been respected. By, by saying it's been respected, I mean that it got tapped into the 50% mark and it created the candle to the downside, which means that it's gonna probably continue to the downside. So I'm marking out the liquidity areas on the 1 hour and then jumping back to the 15-minute. And if there is 15-minute liquidities right here, I'm checking those out and marking those out. Jumping down to the 1 minute. I'm also noticing that this is the overnight range and this is the range to the downside. Now, will this 50-minute candle be closed underneath this area? It might. We're not sure about that yet until the 15-minute mark gets closed. So I wait for it to market open. Liquidity has been swept. This is what I see. Liquidity has been swept. Break of structure is happening right there. And there's a fair value gap created right there, and maybe in this area. So I play it. This is way too close to market open to take the trade. So we just tapped into this fair value gap right here. And now tapped into this fair value gap right here with a bearish candle because we are bearish. And this is where I probably would have entered the trade and put my stop loss underneath either this liquidity area or over this liquidity area because it might continue to the upside, take out this fair value gap, and then continue to the downside. So I'm going to put it right there. Putting my stop loss, my take profit right here. Yeah, putting my first take profit right there. Second take profit on this area right here. Right? Risking 0.5%. Entering the trade and seeing what happens. Right, I'm entering with another position. Why? Because it tapped into this fair value gap right there and also respected it. Or you know what? I don't feel like it. I'm just gonna wait on this 0.5% trade to do this thing. Let's say I only can risk 0.5%. Okay, I'm waiting for it to continue to the downside. And even more. Take profit is not hit yet. I'm just checking the charts. I'm gonna put them here. Now, just going back to the live market right now, you can see that this is a setup. That's a part of our strategy, 1 minute model. Break of structure happening right there, right? Fair value gap happening right there. There's a fair value gap happening right there, and it tapped into the fair value gap area. It respected it, right? But still it respected it to the downside. You can still take a trade off of this, but the bad thing about this trade is that this is the liquidity area right here, right? We have the DAX continue into the upside, maybe going bullish, changing direction. So we're not sure yet until it sweeps the 50-minute liquidity. So if this is a loss that I want to take, I want to take a loss if it's a loss on this low short right here, not on this one, because it's too many confluences that that's not high quality. Yeah, I wouldn't want to take this trade. All right, going back to the back testing. Let's see what's happening here. So I'm just gonna pause this trade. In the back of my mind, I'm thinking, what did the DAX do during this time? It continued to the upside, but still it needs a place to reverse from. So I'm just letting it do its thing. Let's say I took the Nasdaq trade and I didn't take the DAX trade. By the way, you can see on the live market what's going on right now. See, market's continuing to the downside. Breakout structure, fair value gap, continuing to the downside. But still, this is not a trade that I wanted to take. That's the thing. Like we want to take trades that we are happy losing because we know that we followed the, the way to follow the strategy to the T. I'm looking at the DAX right now. There's a new 15-minute liquidity created right here. The market can come up, take out this liquidity, and continue to the downside. Right, going back to this. All right, so it just took me out on the back testing. Um, I'm curious to know. Okay, we have 15-minute liquidity right there. It could have reversed from. We have, and that is it. We could have probably taken take profit right here on this area. Right. So I go to the back testing, a risk 0.5%. And what happened? We lost 0.5%. So what do I do? I'm trying to build up the buffer. If you went through the slow track, um, let me search it. Slow, slow track risk management system that works. I'm not sure it's visible. Can I just copy it inside? Yeah. This is the slow track risk management strategy. You keep risking your first, you start out by risking 0.5%, and then if you win, you have some buffer to be able to risk more. And then if you win again with the buffer that you had, then you're able to risk more. And then on the third win, if you win that trade, you start the process over to flatline your equity curve. So we're at break even right now. All right. Now, what do we backtest? We backtest the New York session. We continue on the same day, and then I mark out I mark out 230 pre-market, 330 market open, and doing the same thing right here. So we have a breakout structure on the London session going to the upside. We have a fair value gap right here on the 1 hour. So what is our bias? Probably bullish. So I'm still waiting for the 1 hour candle to close. So in this scenario, we're waiting for the 1 hour candle to close. We also have 15-minute liquidity right here. We have 15-minute liquidity resting right here because we are bullish, right? So we want the market to continue to the downside, either take out these liquidities and then continue to the upside. Now, I'm going down to the 1-minute time frame and then watching the market do its thing. Market opened, waiting for market to sweep liquidity, and the 15-minute candle just closed right there. It swept liquidity. Now I'm watching for a break of structure to happen to the upside. And there we go. There's a break of structure happening to the upside right there. And this candle is happened right there. I'm waiting for a fair value gap. I'm pressing play on the 0.2x on the 1 minute. All right. There's a fair value gap on the 5 minute right here. It can react off of. And we wait for it to, nope, didn't respect the fair value gap. And then it continued to the downside. Now I remove this. This is probably going to take out this liquidity area. Let me just pause and all right, to the live market here on Nasdaq NQ. This is what it looks like right now. This is on a 1 minute. It's still nothing. There's a 50-minute liquidity that's been created right there. It didn't take out liquidity yet. So we're waiting, basically. The market is creating higher highs, higher lows, and on the DAX, nothing. I'm gonna set an alarm alert on this 15-minute liquidity right here, and then waiting. All right, jumping back to the back testing. So it just swept liquidity, waiting for it to create a break of structure to the upside. This continue into the upside. Now I'm checking for other liquidity areas. Right, there is one right there. There's probably one resting right there that just been swept. Moving these old liquidities. All right, it just gave me a break of structure going to the upside. There's a fair value gap right here. And it just tapped into the fair value gap. Now, would I take this trade? There's a 5-minute break of fair value gap right here. I need to double check the. I try not to watch 50-minute liquidity, and this is the 50-minute liquidity also resting right here. So I'm trying not to see what's going to happen. Yeah, I would take it. Why? Because it just swept liquidity. Yeah, let's go to the live market again. This 50-minute liquidity here got swept. And let me double check what the the DAX is doing. The DAX is still deciding. What am I doing? Up and down, up or down. So we just let me give you some perspective. We opened the market right here, and we have been basically in this area the entire time for about an hour and 10 minutes. We haven't broken through, and New York session is usually the place where accumulation happens. Distribution, manipulation, accumulation. The ideal move is for the market to sweep out this high right here, this one. All right, let's go back to the back testing. If it sweeps the liquidity, I'll let you know. Now, would I take this trade? This is the entry. This is the stop loss area. 53 pip stop loss. And this is the take profit area. Probably this area right there. Yeah, I would take this trade. 0.5%. There's a fair value gap right there resting. So probably this is a perfect position to take profit from because there's still a fair value gap that it can respect. And it can reverse from. All right. I don't know how much that is. Let's see. So 0.8% win on this backtesting. So risking 0.5. The win is plus 0.8, or no, that's not how we count it. Yeah, the average, the PNL is 0.8, so we're up 800 on this. So it just on the live market, the market swept this 50-minute liquidity. I'm checking the DAX also. The DAX is still confused. So on Nasdaq, it swept 50-minute liquidity. There is a 1-hour liquidity also resting right here that we shouldn't forget about. And this is all-time high that's been created right here. So this might continue and create all-time highs, but we like to see a move going to the downside from this liquidity area. Clean up the chart. All right, so I'm gonna set an alarm on this 1-hour liquidity right there, and I'm gonna keep a watch on it. And on the 15-minute if it creates an entry to the downside. So let's go back to the back testing. All right, it took out this area right here. I'm just interested to know it's going to reverse from this area. So just to be clear right here, there is a 50-minute liquidity area right there, right? Now, it didn't tap into the 50% mark of this area, but what I've learned over the years, there is this area right here, which I call the breaker, and I usually mark it as orange, right? I call it the breaker. This is where the market usually also reverses from. It's also the 50% mark, I think. if I'm not mistaken. Almost the 50% mark of the equilibrium. But this is the area where it taps into and then continues to the downside. So these are the areas I also want to take profit. And also on the 5-minute, there's a fair value gap right there on the 5-minute that's been tapped into, and this is where the market reversed from also. So 2 and 2, the breaker and the 5-minute fair value gap. There we go. This is the New York session on the 7th of April. Now if I jump back to the DAX, I'm doing the same thing. I wouldn't really, yeah, I'm just moving on to the live session right here. It's swept liquidity, price swept liquidity. We're waiting for the market to break structure on this area, or ideally continue to the upside to take out these 1-hour liquidities. Right, low created. There is no breakup structure yet. So in about in about 9 minutes, the 1-hour candle will close. I was just about to say the 5 o'clock candle will close. That's my time zone. Right. I'm getting ready for a short. Didn't break structure. What I'm seeing the market doing, closing this, tapping into this area, and then continuing to the downside. Now, if these liquidity areas, 1 hour was not there, I would have risked more. So I'm not risking that heavy on this trade. Yeah, I'm not even taking this trade based on the structure of the market right now. Now, the market can do this, can respect this fair value gap area and then continue to the downside. I don't really like these trades because it gives me a larger stop loss. But still, let's see. Right, I'm taking a short and now. I was waiting for the time basically to tick down to 3, 2, 1, and then taking the trade. So this is a fair value gap right here. There's a liquidity sweep. There is a candle that broke structure right here. And now I'm going to mark out the take profit areas. This is the right. The first take profit hit, and the second one. Let's go. My ears. Yeah, I would love to say that the second take profit got hit, but it didn't. I'm moving my stop loss to break even. With the 2 pip candle. Stopped out at break even. So like this is the same thing happened today, London session, but still I'm happy with this win. Um, all right, great patience today, huh, guys? What is this? This is still enticing me to enter again, but I don't want to because we have two high time frame liquidities on these areas, and it can continue to the upside. It can also just you know respect this area again and then continue to the downside. And I don't think that's going to continue all the way down. Um, but that's how it works. So, great patient today. We have been very patient today in the market. So, what happened? We had a 50-minute liquidity right there, right? And we waited basically all this time to find an entry, to find a good setup, and it didn't look good. So that's why we didn't take the trade. We waited for this 50-minute liquidity to get swept, and the liquidity got swept right here. We broke structure, clear break of structure right here to the downside, and this is where I entered basically out of a break of structure and a fair value gap that's been created right here and respected. Liquidity sweep, bearish trend, fair value gap, break of structure, enter off of it, put my stop loss over these liquidity areas, and then taking my take profits at the 15-minute lows right there. One 15-minute low right there, and the second, uh, this is not a 50-minute low, 5-minute low right there. All right, that's a good trade. Unfortunately, it didn't tap into the second take profit right there. It was, I don't know how many. The same thing happened during the London session, but that's fine. We can live with it. I'd rather not take profit than take a loss. Right. Right. That's about it for today's New York session. This is probably gonna continue maybe to the downside. It looks like it. And it might continue back up, respecting these fair value gaps right there. All right, that's about it for today's session. Have an amazing day, and I see you tomorrow in the London session for you guys that join the London session and on the New York session. Right, see you tomorrow. Have a good day. Thank you.